Hey, how's it going, guys? Want to do a quick video on the Federal Reserve raising the Fed funds rate another 25 basis points. So, as expected, the Federal Reserve raised the Fed funds rate today. And what happened earlier today, the dollar was selling off. And then right when the decision happened, the dollar sold off even more. Gold prices went much higher, went up to like what, 1257 at the end of the day. Silver reached 1609, 1608. And what I've been talking about for what, a year or so is that rate hikes are inflationary. So what happens is the currency, the dollar index goes down, euro goes up. And you start to see a rally in commodities, gold, silver, and whatnot. I believe 4 out of the 5 times the Federal Reserve has raised rates in the last year or so, or 3 out of the 4 times, how many times they've raised it, you've seen gold prices rally right after it. There was one instance where gold didn't rally right after it. It was because gold was rallying right before it. But the concept is rate hikes are inflationary as long as, in my opinion, the Fed funds rate is below the inflation rate. And it is below the inflation rate. How could you even measure it? You could use the 10-year note to use it as a way to say, hey, do we have negative real interest rates? Do we have positive real interest rates? Or if you want to use the inflation numbers that the U.S. government produces, I don't like looking at those numbers because, in my opinion, they're inaccurate. But the market looks at the government numbers, so that's important. Wall Street looks at it. So you've seen the dollar go down, gold prices go up, silver go up. And I did a video this past weekend saying buy silver, short Bitcoin. Just saying it as a pairs trade, basically. Now, I've had to think about Bitcoin and looking at comments of very smart people who have made millions of dollars in the market, such as Nassim Taleb. He agrees that it is in a bubble, Bitcoin. However, if you want to look at it, blockchain technology is very new and will be a big part of our future. That doesn't necessarily mean these cryptos are going to be trading at these levels in the future. But because of that, he says he's unsure where it could go. It could go back to 5,000. It could go back to 10,000. It could even go to 100,000. He doesn't know, and that's why he tells people don't short Bitcoin. I know some people are saying, hey, short Bitcoin. I don't want to touch it right now. Where I may touch Bitcoins is if the CME launches options on Bitcoin futures, which I think they will. Once they do that, and as soon as Bitcoin is touching like a Fibonacci level to the upside, I may just buy a deep in the money, or not in the money, out of the money put, which wouldn't cost that much because it's deep out of the money, but I would be betting on a volatility increase, and I would buy it far out. So I wouldn't buy it 2-3 months from now. I'd probably buy it 6 to 9 months from now, probably 9 months, and just let the option price go up when you have a volatility surge, right? Prices of Bitcoin goes down, volatility goes up, and the option prices go up. That's what I've learned through my trading. But getting back to this, so you should look at this. Dollar is going down right now. I expect to see the dollar go further lower, euro to rally. But here's a caveat. On the technical side, you could look at the fact that the commercial money or the commercial hedgers are adding all these short positions. And this is for the euro. And for the dollar, they're adding all these long positions. And they're close to the historic high in short positions for the euro and long positions for the dollar. When I start to see that, I want to ask myself, why are they positioning themselves in that manner? So they're expecting a dollar to rally soon. Now, from a fundamental perspective, I told you rate hikes are inflationary. So we're playing a tug of war between very smart money and the laws of fundamental analysis, right? I believe rate hikes are inflationary, so that would decrease the price of the dollar or decrease the dollar value. Now, we shall see how this plays out in the months to come, but short term, I expect the dollar to continuously sell, but you could say right before they raise rates next year, whether it be in March or June, we should see another dollar rally, a hard dollar rally. But like I said, right now I am bearish on the dollar, long euro, long gold, long silver. I'm going to be getting in and out. I mean, I sold some of my silver position that I bought the other day. I'll wait to get back in, just trade around it, buy the dips, sell the rips. And until I see more aggressive positioning in the euro or in the commitment traders for the euro and the dollar, I'm still going to be bearish on the dollar as of this moment. Anyways, let me know what you guys think, and I'll talk to you later. Bye.